Mr. Vellayan Subbiah, who is the managing director of Cholamandalam Investment and Finance, joins us right now to talk about their numbers. Thanks so much for joining in, Mr. Subbiah. Good having you. Take us through your numbers. One, there is a slightly less growth on the PAT front as opposed to the top line. But as I see, I believe there is a boost in the other income from operations as well. Just take us through how the quarter has shaped up for you.
Yeah, Neeraj, thanks. Actually, it's been a fairly strong quarter for us.
Sure.
And, as you can see, we're basically seeing close to a 77% improvement on PAT year on year. But for the quarter, actually, the number has been even higher. The segments we're in the commercial vehicle side, light commercial and mini light commercial, have not seen any degradation in quality, and we're continuing to see significant demand for those two segments. So I'd say overall, we've had a great quarter and continue to see good momentum in the overall commercial vehicle and home equity businesses going forward.
Right. Where do you think growth would come in from, and what kind of growth do you see in the coming quarters?
Yeah, so basically, if you take our commercial vehicle business, Tanveer, what we're seeing is that we see a lot of growth, both in the used market, which is continuing to perform very well for us, and on the mini light commercial vehicles, which are like the Tata Aces and the Ashok Leyland, those some of the smaller vehicles, as well as the overall light commercial vehicle segment, which basically plows in the more regional routes, right? Not the major national routes. But all of those segments continue to grow very well. And the performance of the segments are also very strong and continue to be very strong. So we're continuing to be very bullish about that. The home equity business also continues to be very strong. So both of the businesses we continue to see a lot of good growth from.
What about the margins for the company at this point? How are you tackling the issue of cost of funds, and what's your outlook there?
Yeah, absolutely. Obviously, cost of funds has gone up a lot. We don't see the banks basically kind of reducing as much as it's gone up in the up cycle. So I do think that if you see our numbers as well, NIM, we did have about 50 bips compression due to cost of funds, in some cases more. But basically, we've been able to make up most of that advantage by managing both mix and our operations costs on bringing our cost to income down. Bringing our cost to income down will be a continued focus for this year. We think that's a very valuable way of basically offsetting the impact of increased cost of funds and also altering our mix, right? So if we, for example, in commercial vehicles, we're continuing to move our mix more towards the used portfolio, which is about 29% of our portfolio today. Used basically has a much better return on total assets than the new portfolio.
Right. Give us also a sense then on the kind of asset quality that you're trying to defend on your books, in the sense that, how is it that you are protecting yourself from defaults?
Yeah, that's a great question, Tanveer. So if you actually take asset quality, for example, what we're at now is we've got NCLs and net credit losses at historic lows. Our NCLs for the vehicle finance business were at 0.33%. And I don't think that they're going to sustain at these levels. So I do feel like what is sustainable over the cycle is something closer to about 0.7, 0.8%. We're honestly doing a lot to kind of ensure that we manage the asset quality both at the 90-day and the 180-day levels. And we're seeing great performance from those efforts. But I do feel like the levels to which the NPAs have reached, they're at historic lows right now. I do feel over the next year it'll move back from the current 0.33 levels to, I would think somewhere in the 0.6% range.
So what do you envisage your growth would be for the next year? One, in terms of the kind of revenue or the top line growth that you would show. And two, just looking at this quarter and the differential between top line and bottom line, how do you think for the next year the bottom line growth would be?
Yeah. So, Neeraj, that's a great question. If we look at it, top line growth, I do believe one of the consistent things we've had as an internal goal is that we want to continuously increase market share. So when we see the overall market growing at 20%, by the way, if we look at the light commercial and the mini light commercial vehicle markets, they're estimated to grow at somewhere around 16% in basically price terms, which is what matters for us. So if you take that 16% growth, we do definitely feel like we can beat that growth. We don't really give kind of guiding numbers, but I would definitely think that, our target is to beat that growth by almost double.